never take into account any particular individual's investment objectives and financial situation or needs. So if you are watching the recording, please stop it here and read the full disclaimer. I won't talk about myself. I'll just say that since 2012, I have launched the FIPStalker trading.com website. You can review that. I've created a coaching program, the FIPStalker Methods. Now it's fifth session. The sixth session is starting at the beginning of next year. And I'm growing a community which I called Winning with Algos. And the reason for that is what I do, it's all based on stalking smart money, particularly using Fibonacci in an unconventional way to actually identify areas where algorithms, large algorithms, I'm not talking about high frequency trading here, I'm talking about algorithms which actually manage several hundreds millions and sometimes billions. So they work on a larger time frame and they can influence the trends. I'm a researcher as well. This is a paper I published in 2012 and again in 2012 in Italy and in 2016 in Canada for the Canadian Society of Tech Analysts. And proud to say that this research paper has earned an award, the Jack Frost Award in June last year. And very recently, actually, yesterday, another paper was published on the CSTA journal, 3 intermediate and long-term scenarios for the U.S. equity markets. I mainly trade forex, but of course I invest in the markets as well. So I'm interested in various markets and in different instruments as well. So welcome Adam, Jean, Mark, Mawal. There are some other papers I've wrote. I'm very active in research. So today, before we start, I just want to mention that till the end of December, actually till Christmas, I'm offering access to the Winning with Algos communities for free, and you can come and you can get a free 6-hour video course, an ebook, a signal service for 1 month or more, and come and try and come to say hello to the community. We have many people. Now you can go to winningwithalgos.com/free till the end of the year, and it's for free. It's free for you. So trading signal, video course, and ebook as well. All right, so these are my contact information. You can always reach me at fibstalker@gmail.com. So let's get into the content. The reason why, so is the sound good? It's low, it's a little bit low. Let me see if I can adjust this. See, is this a little bit better? It's a little bit better now. I think I cannot do better than this. I hope you can hear me. Give me a yes if you can hear me, please, all of you. Thank you. Okay. Yes. Okay. So the sound is good. Are telling me, so I can continue. So the reason why I wanted to do this webinar is we are in a particularly juncture, and we're going to review a lot of charts in this webinar. It's going to be very practical webinar, and I might even offer ideas and trading opportunities. Of course, these are for your information only. Should always do your own analysis and be critical about what you hear from all the sources, including mine. So what we're going to do, we're going to study the dollar index first, then we're going to review the silver and gold and see whether they confirm what we are seeing in the dollar. Then I'll show you what I call the February 14th scenario for the euro dollar. And actually, I don't think that the markets tend to repeat, but sometimes we can observe patterns that are held in the past and could hold in the future as well. So I think it's always interesting to study price and the markets. And then we're going to review all the other majors, and we'll spot trading opportunities and what the current price action is suggesting, also in relation to the dollar index. Now, the reason why we start from dollar index is that, of course, we cannot trade the majors without knowing what the dollar index is doing. We know that the direction of the dollar index will always affect somehow and will inform what's happening on the in the markets, and basically I use the dollar index to weight more or less the signals I get from the trading system that I apply. I'm rule based. I'm not automated. I'm rule based. All my trading is rule based, and so the first thing I want to do. So if you hear me, okay, everything is good there. So the first thing I want to do, I want to review the dollar index. Now, the index is pretty interesting, the situation at the moment. It's very, very important that we assess the dollar index properly because, again, as I mentioned before, this is going to inform our decision on the trades we make. So we have seen this large move mainly in 2014 and beginning of actually end of 2014, and then basically the market has moved laterally. Since the beginning of 2017, we saw this move lower. So to me, the main question here is to establish whether this move lower is going to continue. So this is just a correction, and then we're going to see a continuation higher, or if the market has indeed reached the bottom of the range here and it's trying to reverse. Okay, so these are the two scenarios, and there can only be two scenarios actually. Of course, this market can continue laterally for some time. You can call that a third scenario, but either this is resistance or this is support, or is resistance, in which case, considering also how dump money is actually positioned here, it would continue pushing this price lower. Okay, so I don't know how you guess where the dollar index is going, but I use different tools. I use I model smart money using the Fibstalker levels, and I model dump money using moving averages. Okay, moving averages may have an effect, so areas between moving averages may have an effect on price, and that's where what I call dump money, without offense. It's just a way to distinguish it from what I call smart money on the other hand. So what I observed recently is that basically during the last move, the dollar index has stopped within this 50%. That for me, according to the way I look at the market, the significance of that, of price not breaking yet this level, is important, because that suggests me that the smart money that wants to push this price higher is actually defending this area. Okay, so if that's the case, and this might be confirmed might be confirmed by other markets. If that's the case here that we are building is that this market is indeed completing a reversal, and the reversal is never a point in time. It's a process that may take several weeks. If we just go back and look at the last instance here, I'm not representing necessarily that the market will do exactly the same thing here. Okay, I'm just using this as a template, as an idea of what could actually happen. Okay, so that's the way, or one of the ways that the markets may reverse. Okay, they actually need to work out all this dump money area. Whereas people who see this move lower want to keep pushing this price lower. But again, I believe that the activity of dump money tends to obfuscate or obstacle the work of smart money, who really creates the trends and is capable of reversing trends is the smart money. Certainly not the retail money or the dump money. Retail money is only 5.5% of the overall forex volume, so certainly that's not the case. Okay, so everything is good and clear so far. Give me a yes if you're still there. Yes, no, maybe. Don't sleep, please. I'm the one supposed to sleep. I've been up all the night trading the European session and the European Open. So so the case we are doing here is that because this area has been defended, it is possible that this market is putting indeed, is trying to complete indeed a reversal. This area also gives us a first target. That first target would be right aligned with that 90 moving weighted moving average there. Okay, and that's the 96.10. Believe it or not, that's what if the market does not break the 92.43, that's where the market could go. Okay, so this is building my case for a reversal. Of course, if you go around and also in FS Street you read, there are many different opinions. I respect all of them. There are fundamental opinions, there are technical opinions. But this is my own opinion. Doesn't mean that it's right. That's what I see at the moment. This opinion seems to be confirmed from, and I wanna actually keep following the agenda here. So we studied the dollar index. Okay. Now I made the case for longs, but there is also a case for shorts, obviously, right? When you look at the sequence here. The sequence lower, the very first measure move did not hold initially, but eventually the market followed up, which means that we can use the lows to lows to try to capture next measure move. And there is indeed a group of smart money here that seems to want price moving lower. In fact, their presence and their shorts around the 94.70 has actually pushed the price down for 3 weeks. So as we can see here, there is always a case for shorts and there is always a case for longs. And that's very normal in a market where for each price level there have to be both long and short. So in this market there are currently people who believe that this market is going to continue lower. These are all the people who sold as this market this week has been moving higher. And of course, there are people who are convinced that this market can move higher. I'm in the group of people who's convinced, well, not convinced, but believes at this moment. I can change my mind very quickly. That's not a problem I have. I don't get in love with my own opinions, but it is supported by what we see here. Now, the other markets I want to review is silver, gold, and gold for confirmation. Here, the assumption is that silver and gold still trade opposite the dollar and the dollar index. Okay, that's an intermarket. I would say condition or rule. It's not exactly a rule because intermarket can change at any time, but let's say it's an assumption. It can also be a wrong assumption, okay, but it's an assumption. So let's review silver first. If I look at silver and I look at the last 2 weeks, right, we saw last week, these long red bar, and this week even longer red bar here, which suggests that obviously silver is being heavily sold. If money is coming out of silver, or maybe should consider gold more important, but of course there is also a link between silver and gold, then it means that money is coming out from precious metals and it's getting into other instruments, including the dollar, right? So the silver going lower, and I'm not going to do the full analysis using the Fibstalker levels of silver. We'll just notice that we have a 50% here, which obviously has has been putting pressure on the markets here and has pushed this price lower and can continue push this price lower as well into a target that I've been mentioning since many months here. It's 1460. So the target is there, the setup is there, and the market is following up in that direction. Opposing smart money doesn't seem to be holding this price, as we can see here. That failed already. Nobody is here at home trying to pick and push this price higher against the other participants at the 19 level here. The participants have pushed at the beginning of April this price lower. Okay, is everything clear so far? Any questions? If you have any questions, just write them down and I'll be happy to I'll be happy to answer them. So silver seems to be confirming. Let's look at gold and see whether gold is confirming as well. And we see the same pattern here. Maybe gold, the moving gold has been a little bit muted, and in gold, we can also make a case of an extension that's failed, but there are always traces, which are valid traces according to the methods I use, that can justify the push lower. The reason why this market has been more muted compared to silver this week is just because it's on top of a resistance area here. Okay, so that might be the only reason why this market has not moved as silver. And if he breaks this area, it might move very, very quickly below. So to me, also gold seems to be confirming. It's a little bit stronger. And if we look at the sequence of inner measure move here, we had a 50% that actually worked, found participation initially here, beginning of May, and then again at the beginning of July, and was strong enough to push price right into that first target. Okay, and now the problem is that the bulls here went on holidays. In September, end of August, they said enough. We go on holidays and we're not willing to pick up this price here. So to me, this is a failed move higher, and because of that, this market has the capability, the potential to go back to 1257 here, which again works for us, or it works towards our case of a dollar index moving higher. Okay. Any question? So I see we had Mark and Matthew joining. Welcome. So I hope this makes sense to you. What we're trying to say here is that, and I'll repeat also for Matthew just joined, we looked at the dollar index. We looked at two scenarios: the dollar index continuing lower and the dollar index putting a reversal. And the second case, the dollar index putting a reversal, seems to have a high probability at the moment. And I justified the reason why. We saw that silver and gold are confirming that. And now let me move into the euro dollar. We are going to review the euro dollar. I'm going to compare the current action of the euro dollar price to what we saw in February 2014. All right, stay with me, and this is going to be fun and interesting and useful, most importantly, because at the end of this, all this chatting here, I want to give you an idea where the majors might move. Also, we trading ideas, which are the same ideas I'm gonna trade in the coming days. Okay, so this is in my eyes, and I hope also in your eyes. I mean, this is a very practical webinar. I'm not just trying to to fill the hour here. Okay, so the euro dollar, when we look at the euro dollar, of course, the euro dollar tends to trade against the dollar index. Euro dollar is 63% of the composition of the dollar index. So obviously, it's always going to move opposite the dollar index. Of course, it has its own rules, its own its own area of resistance and support, its own ways and participation of smart money on, which is really represented in my method by these traces in different time frames. And by composing what's happening on all the time frames, I come out with an idea of the structure of price, and then I overimpose what the dump money. So where dump money is and how that could affect the setup of smart money. Okay, so that's in a nutshell what I do, and that's in a nutshell my method. And I also teach this method in a coaching program. So what I want to note here is that there are always sequences of measure move on the upside, and then there are series of measure move on the downside until they are actually interrupted. Okay, so the last two measure moves that we saw on the upside in this trend were from an anchor, which was this one, which broke price was traded once. The price dipped into it. 61% was defended. The market went into the first target. The next measure move initially found participation and then failed. Okay, so and the failure of this measure move is very important because after a failure of a measure moves, what happens? The market comes and trade the opposing measure move short. Okay, and we took this trade as well. I took this trade and brought it to just to target here. And can you see as soon as price got into the target, then it reversed. Of course, I was not initially expecting or anticipating a reversal here, but then when we look at the weekly time frame, we can see that this market is on top and well within an area of top money support long. Okay, so something had to happen in this market, and not necessarily because smart money is involved. In this specific case, you have to consider that there is what I call dump money, but again, that's not to be seen as offensive, just to distinguish it from smart money. Dump money on the large time frame still sees this move higher, and they say, well, this market is going to continue higher. Let's buy here, and that's the reason why those trends are reversed, or one of the reasons why those trends are reversed. The point is, if smart money is not committed, a trend cannot continue for a long time. Dump money alone is not capable of maintaining a trend for a long time. There is always to be participation from an initiation and support from smart money. So where we are then in this market? Okay, so we had this push higher, which apparently has been created by participation of dump money in the weekly time frame or monthly time frame. Then we had an extension, a reaction to the extension on 1733, and we were able to identify this as well. Price went to that first target, and then it's now retracing. It's retracing against dollar index strength. Okay, so dollar index, the euro, then it's also making a case for dollar index strength. And here I want to see what's going to happen when this market lands into the 117.85. Okay, I believe that we're going to get at least a bounce from this level, and now we have two cases here. Number one is that this bounce continues higher. Number two is that this is a dead cat bounce, because the dollar index is going to continue higher. If the dollar index is going to continue higher, then the euro is going to move lower. Okay. Now there is dump money here in this area from the daily time frame, and I believe that presence of dump money in this area plus the level from smart money, the Fib Stalker level here, we will generate indeed at least a small bounce. Can it be a tradable bounce? Yes. Can it be a bounce that generates a risk-free trade? I believe so. Okay, so that's something for you to watch on the euro, the 117.85. But I promised that I would review the February 14th scenario. So what is this? What is this? Well, if you study the market, and I've studied the daily bars, for years and years, and kind of internalize these patterns, or I like to compare also with past price. Now, again, I'm not maintaining here that we're going to see exactly what happened in the past, but in the past we had a very similar situation, and that was at the beginning of February here. That's the reason why I call it the February 2014 scenario. And if we look at the weekly chart, which is the one that you see here, actually we had a similar pattern. There was a high, there was a 50% that traded and broke price somehow into the first target within a weekly area of dump money. Okay, so that's the pattern that I noticed, and on the weekly doesn't make a lot of sense here. There's a 50%, the market landed in that area, and then there was the move higher. But then when we review it on the daily, then it makes sense, and I believe it's always important to study this situation. Also because they give you experience about what the market can do. I mean, they give you an idea of what the market can do. Okay, so here, if we look, then if we make a comparison between what we saw, what we're seeing now in the euro dollar, what we saw back in February 2014, we had an initial retrace. The market went into the first target, and then it retraced. Okay, so if we want to try to make a parallel and say where we are at the moment. Well, at the moment we are exactly here. We're testing this area of dump money here, and as you can see, the market has bounced from there. But then, eventually you went to trade the next measured move here, right? And this market was a very technical market. Also, the current market is a very technical market. It was a sequence of 50% traces here, and this happened more often than you can actually believe. And the market then reacted at that level, okay, and continued higher. So are we in the same scenario? Mind that I've been talking about this scenario now in the last probably 2-3 weeks, okay? Because that's when I noticed it, then I started talking about it. And I said, well, if the dollar index continues lower, then we could see for the euro something like that. I said that to my subscribers and the people in my trading room. And look at what we got here. As you can see, and again, I'm not saying that things are going to play out exactly the same way. Okay, don't quote me on this. I mean, I'm just saying that that's what could happen. And indeed, this is not a 50% retrace. The low was 117.12. Well, it could be also. I mean, you could also see it as a 50% retrace if you want to front run. I modeled it as an extension here, but nevertheless, even if it was a 50% retrace, right? No, we could say, we should see a bounce from here. Because I believe it's an extension, I modeled it in a different way. I modeled it like this. But in any case, it doesn't change the nature of what we're trying to say. There's an area here where this market could bounce. And if the dollar index is continuing lower, this market is going to continue higher into 120.42 and higher. And I'm going to show you in a moment. If the dollar index is going to continue higher, on the other hand, and I rate this as the higher probability option at this moment, then what is going to happen is that after this bounce, we're going to have a possibly tradable short, sorry about that, from the for the euro here, which actually will put back the euro in its trajectory that had started at the beginning of September here, which was lower. Okay, so my take here and my hypothesis is that dump money on the weekly time frame is pushing price higher, but because there is only dump money, there's no smart money pushing this price higher. As soon as this move has ended, this might actually resume a move lower. Note that I'm going to take that trade if I have the opportunity to take a low risk trade, which gives me a risk-free trade, because once you have a risk-free trade, then I'm not going to worry about what happens. It can even stop me out. I mean, I'm just going to reassess, trade other markets in the meantime, and wait. If you don't know what risk-free trading is, can you give me a yes or no if you know what risk-free trading is? But in case you don't know, just to review the presentation I gave a few days back, and you can find it in the on the FSU website. Okay, so now if this market continues, the last thing I want to say is that when you put things in perspective, and you should always, on very large time frames, large time frames are very, very relevant. For example, in the euro for many years, we had support from the lows to highs, which came into play in 2010 here, and again in 2012, and that's what was when the famous statements, Draghi, I will do whatever it takes to save the euro. Well, he didn't save the euro. And what he did is that he caused a rally that went to trade into the 50% short, okay? From a 50% long to a 50% short, and obviously that 50% short, because it was significant in the space of 2 years, has broke price into the first target. Okay, so if this market continues higher, where is this going to go? Well, an obvious level is the next measure move short, okay, which is very, very close. It's 2180, and that's a level that I've been mentioning since 2014 on FX Street. Before it was slightly different. It was from lows to highs to lows here, so a little bit higher, but basically it's the same trace from a conceptual point of view. Okay, so that's my case for the euro, and if the euro continues higher, you have to watch probably this area here, 117.85. Which could be a low risk entry for the euro. Any questions so far in relation to what we said here? If not, then I'm going to continue, and I want to then review, I think, some of the majors here. Okay, Mark, everything is good, very good. Thanks for the feedback. And I want to review the majors, and I would like to start on the US dollar Japanese yen, which is something that is in action at the moment. We also took a small initial trade in this market, and possibly this market could, after a correction, continue higher. Now, I love this market. It's one of the most technical markets I know since I've been trading it. And very, very technical market that follows measure moves. And for example, here, this reversal here, actually I call this reversal when we were running the Tokyo open room on FS Street in the beginning of 2016. But this market went extension to the first target, traded again the next extension, and then it failed just of a few pips here. And when it failed, the trend, obviously, what happened? The 50% short that's traded. And I vividly remember people mentioning when the market was here, saying this market is going to go to 132. And I said, be very careful. The trend here has ended, and has ended this day here in October, beginning of October. So this market cannot go to 132. There's no one pushing this price higher into 132. Okay, so the market then moved lower into first and second target, and then being extended beyond the second target, traded the next measure move to the PIP. I think I called one of these two, or the following one. I called it on one of the actually when I was doing one of these webinars. I don't remember if it was the first or the second one. And then, I mean, I love this market. I mean, it's so beautiful to trade. It's so much very technical. Look at this beauty here, 110.85, first target, and right into the second target, and then the trend failed. And if you ask where the trend failed, well, imagine The trend failed on what? On top of a full range 50% here. Sorry, this is a partial range, of course, 50%. And so once the short failed, the long started. Support from fantastic market. I mean, I love this market. I mean, I get excited when I talk about it. So, the 50% long has held once, twice, 3, 4, 5 times here. Okay, and look at the shorts. So the shorts have held 1 and twice. And what happens here? Just a few pips, this market fails. I think now you start recognizing the pattern, right? What happens when a trend fails? And that's part of my Fibstalker methods, the opposing 50% trades. All right. So I hope this, I don't have to convince anybody. I have seen these patterns and traces work again. But this builds the case because the bears are not on top of this price any longer now. This helps the case of a dollar index reversing. Okay, why? Because this price won't have anybody stopping it now. People didn't step in when they had the opportunity to do that. They're not gonna step in now. There's nobody else there. Okay, so as soon as and this is my belief, as soon as this market has worked out this area of resistance here, dump money resistance, this market could actually, this market could even come back to and trade the 50%. I don't care. We took a very small position somewhere with the stop below lows in the trading room here. It's very small risk, half of the risk, and the reason for that is we are waiting for a throwback here, which could be very, very mild, in which case we want to have something at stake already. And then, that's my case here for a trade in this market. Now, this has found some resistance here as we were anticipating. This market could continue higher. Now that it has support from smart money here, this market could continue higher. So let me give you a couple of scenarios that you can use to pick up the continuation into this market. And then after that, I'm going to show you the target for this move. Okay, we have very interesting target for this move. Before I do that, let me show what are the potential scenarios for this market. We either go to the opposing 50% here, and that's capable of, it's enough to stop temporarily the market, and the market will retrace. It could retrace even to 111.06. We don't know that, but it could retrace less than that. Okay, so that's within this area is the first opportunity for a long. If we get above the 113.23, then I'm going to use this anchor here. This is part of the Fibstalker methods. If you're interested, you can always sign up, and we're going to use these highs to whatever new highs it's printed before the retrace. Okay, I'll put it here just for fun. I mean, I really don't know what that high is going to be. If it's this level here, 113.27, then this market could come up into that level and then retrace. And I would add to long around this area here. Okay, and I'm not going to tell you this area because again, this high here could be anything. We don't know. So what we know is that this is a valid anchor, and so in the coming days, keep an eye on whatever high is printed. If an high is printed before the low is printed. And then trace from highs to highs around the 50%. It's the area that you have to look at for timing. For timing, I also use a proprietary technique which is the Phipps talking timing. Again, that's something I teach to my subscribers as well. But you can use any timing technique you know. Just the area I believe is important. Now, if that happens, of course, this will be what I believe a safer entry for this market. But the beauty of this is that the 50% that this market has traded after failing, after shorts, the bears have failed to actually sell this market here as a target, and the target is 116.50 area. It's this target here. Now, I'm not going to say that it's going to get there in 2 days, but in few days or couple of weeks or few weeks, price could get there. And this is from current level is more than 420 pips. All right. Now, I explained you why I believe this market can go there. It doesn't mean that it will. But usually when we see this kind of behavior, I mean, the probability is very, very high. And I gave you a way to enter this market. Mind though that now that the bears are out of the way, we also have in this market, we have to consider the target of this larger time frame here, which puts price, believe it or not, puts price at close to previous highs here at a level which is 123.25, right? So intermediate term, we are looking for something that is going to push this price higher. For this to happen, we need, of course, the dollar index continuing higher as well, right? Does it make sense? Does this build a case for a dollar index continuing higher? Give me a yes if you believe it does. Give me a no if you believe that this is nonsense. I think I gave you a clear explanation here, also based on how this market responds to this kind of traces and responds to areas where smart money and algorithms are actually positioned. Okay, so I hope this makes sense to you. And so we have targets above for the US dollar Japanese yen, and also offered you a way to time the next entry long. Okay, hope that's useful to you. And we could choose many of them. An obvious one would be pound versus US dollar here, and I will continue until I actually can here. And this market is obviously on a recovery, which has been kind of in the last few days also propelled up by news, by the results of the bank's stress testing. And it's funny that there were people I've read on the boards that were saying, to sell these levels here. I mean, to me, it's a total nonsense. A follow price. The price not saying that the market is going lower. And when we look at this market on the larger time frame here, this also was an incredible market. And by the way, I want to mention one thing here, very technical market, and I want to mention one thing that I never saw before. I saw it for the first time. There's a 50% short here, which found participation in April. That was April 2015. So you see how these levels are very, very relevant also when we consider very long period of times. Price got into that first target, profit taking or whatever caused this market to react. And this is the Brexit day here, a long bar. Unbelievable what happened. Let me show you what happened. In one day, the market went from the setup, which is this level here, 148.90, to the first target. Never saw that before. In one day, we went from 148.90 to 133.58, which is 1,500 plus pips. Okay, so this is beautiful, obviously, and this shows that the market is and the market is very technical as well. Okay, because once that happened, the market then eventually continue even lower here, and then the sequence has failed, and that's so the market tried to participate around this area, but then eventually the 61% level of that next measure move failed, and that started a move higher. Okay, so this market long term, it's on a move higher. To what? Well, the algorithms are telling us nobody's going to sell this market before, at least from the short point of view, before it gets into, and I'm talking about shorts only here. It doesn't mean that it cannot go down. What I mean is that the algos with big money, they won't touch this market. They won't try to sell this market, and the ones working on the larger time frame until it gets at least into 44.80. Believe it or not, okay. And I believe that because I've seen these patterns working for many years. Right. So where are we at the moment? Obviously, we are in a correction higher. This market can accelerate. And to me, when I see these bars, long bars going out, I'm not worried at all. I mean, in the past, I was kind of mourning the fact that I was not in this move. Now I couldn't care less. Do you know why? Because there are always opportunities for a retrace and an entry in the direction of the trend. So the first thing that we have to note, and the most important development that we had this week, is that this market was participating to shorts in the 133.40 area here, okay? And I really believed that we could get to the 128, but actually the market thinks something different. And the most important development was actually yesterday when the market broke the 134.15. Okay, why is that important? Because that cancels out all this area of resistance, which is not there any longer. So I don't even show it on the charts. And now we know that this market can continue higher. The anchor they're using, it's an inner anchor here. It's a notable anchor. And that gives us first and second target. And look at how close the second target is from that 50% level. Can the market get there? Or you bet it. I mean, there are algos who want that. Algos who actually traded here, and they want that. They want that. Even if we discover those algos after the fact is not important, because this is a typical example on the daily. The inner measure move is a 50%, gives us first and second target. So I couldn't care less. I'm not participating to this move. I'm not going to mourn the 250 pips we lost from the bottom, provided that you could actually trade that, because this move into the bottom was very fast, and nothing actually prevented this market from continuing lower as well. Okay, so you always have to, after the fact is always easier. But here the point I want to make is that I'm happy anyway. Why? Because I know where this market can go now. We have a first target, the 134.52. We have a second target, the 135.81. I'll let the market move. I never participated highs or lows. That's not the way I trade. I always trade retraces. And if the market, and I believe at this point when the market reaches previous sizes and second target at 135.80, I'm going to trace the next measure move. It's going to be an extension from highs to whatever new highs we get. Okay, and that's my case for a trade. And if you wish, if you like it, to monitor this, your case for a trade, continuation long in the pound versus US dollar. Okay, any questions in relation to this? You understand the reasoning here, how we look at this market, and some people, they have this need to trade, and that's an emotional trait, an emotional behavior. They want to be in every move, every trade. They want to trade for 50 pips, 15 pips, 5 pips. That's not the way I trade. You get one good trade, it makes you your month, it makes you sometimes your year. All right. So because I use money management to to actually reach objectives in trading. So I don't have to be in every trade. I want to be in low risk trades. The next low risk trades that I see in this market is 134.86. Right? Any questions in relation to this? I'm going to review the US dollar Canadian dollar, which is the last market I'm going to review for you today. And that's another major. And this was, for me, a surprise as well. Well, I knew that we had resistance below this price, was represented by this moving average here on the weekly. So we knew that something could happen there. What I didn't know that the reaction would be like this. Okay, so when the market moves like that, eventually retraces. The retraces might be deeper or shallower, and we have different anchors that we can use, notable anchors, and one level I'm going to give you is the 128.26 if the relative highs have been printed here. And again, when we review the market on the larger time frame, we see a very technical market. The reaction started at the 120.77. The 50% from the partial range in 2011 here, and it's now pushing higher. Of course, this market had participation short as well, and again, this is a very technical market. It was very technical also on the upside. So the 50% here has traded a number of times. Has traded the 35.80 has traded in October last year, December here, and again it has traded in April and May, and eventually that was the last nail in the coffin, and this market started moving lower. When it moved lower, I mean, it was, I'm not gonna do the full sequence here, but some of the moves are not on the weekly, they're on the daily, but this market actually traded the 50% extension when near the first target, below the first target, and then stopped just when they hit that 50% long. Okay, so where is this market going? The larger 50% says that this market is moving back to 159.27. Is that possible? Absolutely. Is this building a case for long dollar index? Well, you bet it. So we already have a few pairs that euro dollar apparently could be moving lower, which is 63% of it, and that could be alone enough. The US dollar versus Canadian dollar moving higher, so the Canadian dollar moving relatively lower to the US dollar, and so this builds another case for the dollar index moving lower. The resistance level here is very, very close, and it's going to trade this week, possibly. This market is going to also to possibly continuing higher, I believe, into a retest of the resistance 135.80. Because the larger smart money here has traded, I don't believe this is going to hold. Okay, and this is my personal opinion here. All right, so this is it. This is what I wanted to share with you today. So this should give you an idea where the dollar index is going. A few trading ideas for the euro, the pound, the US dollar, Japanese yen, and well, we didn't touch on the opportunity in detail on the Canadian dollar, but I do that in my trading route. Just want to close before we go. We jumped into the charts. I just want to remind you, if you have not done that already, just go to winninwithalgos.com/free and subscribe. It's free. You don't have to do anything. Just put your email address. Oops, sorry about that. And you'll get the free Winning with Algos course, the 1 month of free trading room, and I'll invite you to see what we do and how our community is growing, and also the 5 key concepts to correct your trading behavior which is certainly helpful, and it's going to open your mind on certain areas. Okay. All right. So this is it. I hope you. It's 8 a.m. I hope you liked the presentation. I wish you the best of the continuation of the week, and I'll see you in the trading room. These are my contact information. See you the next FX Street Premium webinar. Thanks for being here, and thanks for your interest and attention. Bye bye now.